Folks, how's everybody doing? I didn't have a chance to put out a video today. I'm doing it right now. I was traveling. I'm up at Dartmouth College. But anyway, I didn't have a chance to send out any emails, but I'm doing this video instead. Some important information that I want to put out there. Those of you who are not on the email list, you're going to get this information because I'm putting it out via video right now. So crude oil hit my downside target of $43. You know, I've had that target for a while now when we were up above 50, and I had all, you clowns and the mousy boys telling me that crude was going to go higher. I said it was going to go lower. I kept looking at each week's petroleum status report. I was talking about weak gasoline demand. I was talking about high production. We saw the inventory builds, but it was really the demand situation that kept me on track. And I said 43. We hit a 43 handle in a sort of a flash crash in May, but then we bounced up sharply from that. And I said we're going to go down and revisit that 43 and probably make lower, and we did. So it hit my downside target. Now we got the API inventories released today. They came out on the bullish side, a draw of 2.75 million in the crude, I believe. We did get a build in the distillate. All right, let me just say that 1.8 million build in the distillate, and many of you know I've been looking very closely at what's going on with distillate because we've had strong demand. Inventories were down year over year, although that gap narrowed. But so that build in the distillate is a little bit concerning because distillate was kind of the only bullish thing in the last week's EIA report. However, and we got a small build in gasoline, less than 1 million barrels. I think it was 380,000 or something like that. But the point is, we hit my downside target of 43. We saw a draw in crude. We'll get the EIA weekly petroleum status report tomorrow. But I think you could start buying down here. I think you could start buying crude down here. I think you could start buying oil ETFs down here. I think the situation may start to improve, all right? But we will see the numbers tomorrow. And again, the only thing I think that would throw a little caution out there was that build in distillate. But, a lot of times the EIA report comes out and it totally reverses what happens on Tuesday night with the APIs. So we have that. Stock market down today. A lot of geopolitical stuff going on. The United States shot down an Iranian drone. So that's the second time in 2 days. Of course, it shot down the Syrian jet on Monday. It's shot down the Iranian drone. The Russians are really, really upset about this. The United States, as far as I'm concerned, has no business in Syria. It is an invading country. It is not fighting ISIS. It is backing up. Basically, it's backing up ISIS. It is backing up Al-Qaeda. It is backing up al-Nusra. These are the proxy fighters for the United States that are there. They were trained by the CIA. They were trained by the Defense Department, and they are there to overthrow the Assad regime, which is not going to happen. That portion of Syria, the capital where Assad is, that is in safe hands. That is not, you're not going to see Assad go. But the eastern portion of Syria, where the United States is now establishing basically a foothold, that is going to be balkanized. Okay, you're going to have the United States there. You're going to have these so-called Syrian democratic forces, which is BS. It's a load of crap. Those are the terrorists that we back. Anyway, all this stuff is leading up or bringing us dangerously close to a confrontation with Russia, which would be a disaster, really a disaster. So the market's not paying attention to that. It's not paying attention to the Qatar-Saudi thing, to the Saudi-Iranian situation. We've got a lot of geopolitical stuff. I don't normally talk about the geopolitical stuff. I stick with the fiscal flows and the MMT. But it's very hard to ignore what is happening right now because it is the highest level of belligerence and potential for very, very serious conflict that I have seen in a long time. So that is out there, okay? That is out there. That's a serious situation. I hope and I pray that nothing happens, like the United States shoots down a Russian jet or Russia shoots down an American jet. I hope and I pray that that does not happen, because if it does, then the markets, what happens in the market is really very, very, very much secondary compared to what may come down as a result of something like that. So once again, my crude call was exactly on the money. You see today, again, the zombies, they're buying the dollar, they're selling gold, they're selling commodities because they think higher interest rates, that quashes inflation. It's exactly the opposite, people. Exactly the opposite. Higher interest rates, as I've said many, many times, that is a price increase. It's a general price increase as it raises the level of inflation. You do not buy bonds when the Fed is hiking interest rates. You do not buy the dollar, maybe very short term, when the Fed, because the zombies are going to do that. You do not sell gold when Fed is hiking interest rates. You can if you want. Go right ahead. You can if you want. But these are great opportunities for people who know what they are doing. So I am right once again. And that's it for the report. I'm going to try to see if I can send out some emails in a little while. If not, you'll probably get another one of these, but definitely tomorrow. I'm just going to be here for another day, then I'm heading back to New York City. Take care, everybody. Bye-bye.